Hello, and welcome to myfinanceteacher.org. Let's talk about gold today. Over the last few days, Bollinger Bands on gold started to narrow compared to what happened in December last year. At the moment, there is not that much excitement in gold. But first, let's have a look at the US dollar. Before we continue, let me remind you guys to subscribe to the channel if you haven't and click that bell notification. Thanks a lot. Looking at the previous intermediate cycle in the US dollar, which consisted of 4 shorter-term daily cycles, it looks like on average these daily cycles last for about a month and a half. Now looking at the ongoing intermediate cycle in the US dollar, it might be that the first daily cycle finished over here on the 31st of January. However, I think the likelihood is higher that the current daily cycle, the first daily cycle, hasn't finished yet, and we are to see a correction over the next couple of weeks. The reason I think so is because if the first cycle finished on the 31st of December, that would give us a cycle of only 31 days long. It's a possibility, but a not very likely one. If the first daily cycle is still continuing, that would give us 38 days so far in the daily cycle, and in the next couple of weeks we should probably see a correction down in the US dollar. Possibly over the next several days, RSI inches closer into overbought territory, price itself pokes again a couple of times above the Bollinger Bands, all of that indicating some overheating in the dollar, which might give us a shorter-term correction. Possibly something like this, say back down to 200-day moving average in the second half of February. If that were to happen, hopefully we're going to see a push upwards in gold over the next couple of weeks, as the ongoing second daily cycle in gold finally continues its uptrend. There is a risk, of course, and the risk would be more pronounced. Investors should start thinking about being cautious if gold breaks below the previous intermediate cycle high. That's somewhere at about 1560, let's say. A week or two ago, we saw gold break above that high. Looks like a couple of days ago, we saw a retest of that breakout, and so far we are bouncing up a little bit from that retest. But the risk is still there, and if we see a lower low below that 1550 that we saw a couple of days ago, or below 1560 compared to the previous intermediate cycle high, then there is a risk that the second daily cycle in gold had already topped here at the beginning of February, and that would imply that gold might enter into a frustrating downward slide until the end of this intermediate cycle. However, that's not my primary scenario. I think it's more likely that we're going to see a higher high on gold. And there are a couple of reasons for that. Firstly, the ongoing intermediate cycle so far has been going on for less than 3 months. It's been going on for 87 days. Generally, these cycles last for about half a year, so there might still be some time for gold to give us a final push up above and give us a higher high before the intermediate cycle decline takes place. And the second reason why I'm still expecting a higher high is because looking at previous several intermediate cycles all the way since this bull market in gold began at the end of 2015, we see that in most of these intermediate cycles, except for 2 out of 7, the top of the first daily cycle was not the top of the whole intermediate cycle. Only in this cycle, in the second half of 2016, the whole intermediate cycle topped early within the first daily cycle. And the same happened here in the first part of 2018. The whole intermediate cycle basically topped within the first daily cycle. Otherwise, in 5 out of these 7 cases, we saw a higher high in the second daily cycle. So personally, I'm still holding on. Let's see what happens over the next couple of months. And on a related interesting note, looks like there is some criminal investigation into JP Morgan for manipulating gold price. There you go. Hopefully these banksters will get what they deserve. And one more thing for today, I want to have a chat about crude oil as well. We see a bounce in crude oil over the last several days. As I mentioned a few times in the previous videos, crude oil has been kind of stuck between this $51 and $61 price range. Looks like recently it retested that lower range again and is bouncing, so this might be a good entry point. I personally have entered using the USO vehicle, that is an ETF that tracks crude oil price. And at current levels, the risk-reward ratio is pretty attractive. You might have a stop loss below the recent lows. That would give you a risk of about 3%. And if crude oil retests the top of that range, say $60, that would give you nearly 18% potential reward. So reward is 6 times larger than the risk. I think that is an attractive ratio. Besides that, RSI has been deep into oversold territory. The price poked several times through the Bollinger Bands. And in addition, crude oil is within the normal time range for an intermediate cycle low. These cycles last for about half a year. So I'm pretty excited to see what happens over the next couple of months, both in crude oil and in gold. Let me know what's your expectation into March in the comments below. But before you enter those comments, remember to hit the like button, and I wish you a good weekend and good luck in your trades.